Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for the Market MRI Pro. My email address is marketmripro@gmail.com. It is November 10th, 2024, and I titled this review, Markets Melt Up. Market MRI Pro is a new tool in beta testing. The session's for educational purposes only. Any recommendations are in the spirit of education, not investment advice. The intent of this video is to demonstrate the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make, and I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. Those who know me or have been following me in YouTube and stocksanddocs.com know that I am platform agnostic. I have multiple tools in the market. I have them for TradeStation, for TradingView, Inside Wealth Charts, thanks to Rob, soon to be in Metastock. And this is a freestanding app that was developed by my programmer, Praveen, who's a genius. It is not yet launched in the marketplace. It should be coming soon. We are doing some tweaks on the charting. Praveen is doing tweaks on the charting module to make it faster. If you're interested in the tools, if you own any of the tools that I have, if you're interested in top-down trading, join my Google group. It's called Top Down Trader. Sign into Google Groups. Just go to Google Groups in your browser, find the group, join it, link, unlink, and then choose how often you want to be notified when I play something. My intent is to do something there daily or as often as I can. It will be vary among the different platforms. I'll give you my insights into the market and tell you what I'm thinking and doing. All right, let's take a look at the markets. Now, those of you who've been around for any while are going to notice that when I'm using this tool, I don't use a PowerPoint for going through the top-down piece. And the reason for that is simple. Praveen built all my goodies into the app. So let's start with the timing model. And as I showed on my YouTube video this week, the big difference is this bar that's at the bottom of every window, and that's the buy-sell. And the reason why I wanted to put that there is I wanted to take anything that was subjective out of the model and just show you what the model says. When it's green, you should be long. When it's red, you should not be long or consider being short. This is a weekly model. By definition, it is slow. But if you look at it and you enter the market on the week of November 6th, where I've highlighted here, you would not have come out of the market and experienced quite a bit of a run. The Qs have not been as simple, but the Qs have had some deeper drawdowns. The Russell, boy, this one's been tough, but it would have kept you in for much of the move, and the diamonds, you would have been in most of the move. Now, I don't rely on just the weekly model because, as I said, it's slow. So I also have a daily model, and the daily model I use to fine-tune. So when the weekly model is positive, you can pretty much be certain that I am going to have my long-term positions long. When the daily model flips to a short position, I'm going to start to look at trimming my short-term positions and raise cash. So on Wednesday, we came out of, or Tuesday, depending on where you look, out of the sell on the daily into a new buy. So with the daily model long and the weekly model long, right now I have less cash than I did a week ago. I have more positions. Like you, I had a good week in the market, and I am not short. Now, I will be very careful because I'll show you things that worry me about this market and things that excite me about this market. This is, by the way, unscripted, unprepared. I go through it just as I would look at it on my own analysis. This green line represents the 3-month or 13-week new high, new low. And I point it out because on none of these indexes, on the daily nor on the weekly, are we at an extreme. Why is that important? Because this is probably my best signal that things are going to change in the market, and we are not getting a signal. The next tab I'm going to look at is what I call the market briefing. The market briefing has 3 tabs that are designed to give me a good sense of what's going on in the market. Now, I know Praveen listens to these, so when I see things I'd like to change, Praveen, I'd like to add a 5-day change, just like we have here. I don't need the 20 and the 50-day change, but I would like to add a 5-day change on the symbols. I've ranked these by 1-day close, and you could see the Russell led on Friday, Diamonds 0.62, Spiders 0.43, and Qs 0.12, and volatility was down. Open is where it opened, obviously, the high of the day, the low, and these are percentage moves. Then the change from the open where we closed, we opened lower on the IWM and closed higher, so of course it's going to be a bigger number. The range of the day, that's a percentage of the value, and then where we fell in the closing range, and you want to see in a strong day to close near the top. Here we have new highs and new lows on the NYSE and the NASDAQ, very, very bullish. When we look down here, and I look at 1-day change to see what's leading in the market, we see that utilities led 1.92, real estate, then discretionaries. Utilities and real estate have been laggards. And you can look at the 5-day change, although everything's positive. In 5 days, you had discretionary up 7.5%, 6% on industrial, 6.5% on energy. Talk about a bounce there. And technology almost 6%, 4% on communications. So these were laggards, and so you had some rotation in the last day of the market, is all that is telling me. We can look at what has been, we can rank by 5 days, we can rank by 1 day. There's a few things that you'll have to learn about using the ranking module. And again, discretionary, energy, industrial, tech, finance, communications all had major moves on the week. If we look at 1-day change again, turn off that filter, you can bring up the leading groups: aerospace, telecommunications, fintechs, biotech, tech, data, even home construction had a decent day on Friday and a decent week. I think what you'd expect to see as laggards will be things, let's look at 5-day laggards. Cannabis got clobbered. There was a number of referendums in Florida, even though the majority voted to allow, you had to have 60%, it didn't make it. Solar, clean tech, renewable energy, aren't those the platform of the left? And with the left losing to the right, that's part of the expected changes you might see. Other thing I wanted to look at was remember to turn off. Over here, we've taken the buckets analysis that I do, and I've got the S&P 1500, the NYSE, and the NASDAQ. Now, these advances versus decliners look light, so I'm going to ask Praveen to review those. But you could see the gray bar is where we were the prior day, so the sector performance was better, the industrial performance was better, and the stocks above the midline is creeping up on each of these. What is that important? Because when you're above the 50% line on this number here, it means you're probably in an uptrend. And what we're looking at with that a midpoint is take the S&P 1500, put Bollinger Bands on it, and then you have a line in the middle, which I believe is a 20-day moving average. In an uptrend, typical stocks will bounce between that midline and the upper band, the midline and the upper band. And over 90% of the time, you expect the stocks to be inside the bands. The basis behind the buckets is that if 90% of the time the stocks are supposed to be within the Bollinger Bands, then what happens when they shift too much and you have a lot of stocks outside the bands? Well, you expect the stocks to come back. So I'm going to talk sometimes about a left shift. When I talk about a left shift, look at these gray bars. This represents a week ago. A week ago, we had 18% of the stocks in the S&P 1500 below the lower Bollinger Band. Now, at the time, I said it's not a guarantee because you can get to 25 or 30, but this should be a place that we're getting close to a reversal. This is what I call a left shift. If you look at the green bars, which represent where we are right now, that's a right shift. We've shifted to the positive side. The narrow gray, which you can see on both sides, represents a day ago. So we came off some of the overbought on this of each of these indices. We're still very bullish appearing with the greens outweighing the red. And with 15% of stocks NYSE above the bands, 13 of the NASDAQ, 19-20% on the S&P 1500, and the Russell about 19%. That's a lot of stocks to be above the Bollinger Bands. Now, we've had a massive market move, and these things can go higher, but that would be in the category of, man, we might be thinking we need a pause soon. This is a very climax run feel in the market, but we are in the seasonality strong part. The breadth view, we look at things such as, we look at indexes charts first, and here's the NYSE on the left and the NASDAQ on the right. And we look at AD lines, new high, new lows, up, down volume. We look at stocks above the red 200, stocks above the white, the 50, and stocks above the 17. And you can see it's very bullish for all three of those. Very strong market, but not the extremes that we've seen. And then down here, the inverted triangles, a Hindenburg omen. The little asterisk, that salmon is Bango. A Bango is exuberance. So we had exuberance on the NASDAQ. So these markets have had a big run, especially the NASDAQ. It looks like it potentially is getting a little bit extended there. I can look at my ratio charts. Now, the upper left is Bitcoin, so we'll ignore that one. The rest of them are the S&P sectors, but these are not charts of the sectors. These are charts of the sectors versus the spider in ratio charts. I look for what's up at the top. Communications, discretionary are your leaders. What's weak? Staples, utilities, healthcare, and real estate. What are those? Those are the defensive sectors. Now, everything was up this week pretty much, but some things are going to do better than the index, and some things are going to do worse than the index. And so the ones up at the top did better. Now, what's had some recent moves that are not at the top? Industrials has certainly moved up some, as has technology here, and financials, although they've come down a little bit of late. This gives me a sense from a top-down perspective of what's working and what's not working. I think what I'm going to show you next in this tool is as good of a way in a real-time fashion to start to digest a top-down perspective. Let's go into the JAS layout. Now, right now, this is pretty much set up for how I trade with my chart patterns, etc. When we launch the product, we'll have a full suite of indicators and customization and drawing, so you can put in your own indicators and make your own chart. I like to treat the markets like I did reading an EKG. I like to have signals that will give me a sense of what the market is doing. Down here are my dots indicators, and they look at two different trading systems, gaps, volume, breakout, momentums, and just by looking at them, it gives me a sense of what's going on with an instrument. The more bullish the stock is. The more bearish my indicators, the more I'm concerned about the stock. I can scan for those. Up here is the high-low jump. When it's above 95, it's too extended for me to buy. When it's below minus 95, it's too extended to the downside for me to sell. This here represents the weekly on top and the daily bongo on the bottom. In this, you can see the green is the 17, the white is the 50, the red is the 200 simple. Here are regular volume bars. Here are my impulse dots, and you can see, and we'll over time explain to you what they are. And then I like to look at on-balance volume versus its moving average. and relative strength versus the SPY, and similar to looking at it versus its moving average. Now you'll notice there's a green and a red box. Why is that? Well, I might care what the absolute value is if I'm looking for divergences, but I really want to know, is it above the moving average, which would be green, or below in red, and how many bars since it crossed? It's just my charting. Everybody has their own preference. Up at the top, we have a number of major indexes, and then the components would break out underneath if I clicked on one. The one I've clicked on right now is the JAS list. We have combined the NYSE and the NASDAQ and the Amex rather. We put a $1 and $100,000 filter on it, and we get 3,367 stocks. That is the universe that I will do my prospecting in. Up here, we have a bar called top down. Whichever list you have put into the top, when I hit top down analysis, it's going to take those stocks and it's going to put them into the various sector components. We also have 144 industry groups. So I've taken that 3,300 stocks, we've put those that could be put into sectors and industry groups, and in true top-down fashion, I can now look at the market from a bottoms-up or a top-down perspective to understand what's working. I have 3 proprietary momentum tools for ranking the markets. I have a short, intermediate, and long-term, and even long is not months. It's a 3-month time frame tool that allows me to rank what's been leading during that time, and it looks at momentum. Since I'm a shorter term to swing trader, to position, not a long-term trader, I like looking at the shorter momentum tool. I can look at what is the strongest sector by my momentum tool: financials, industrial, technology, and consumer defensive. And that was on Friday. Now, cyclical over a longer period of time was powerful, and you can see it was actually up on Friday. Now, I could look at just financial sector, and you're going to see this turn into the 17 different industry groups in the financial sector, and then I could rank these by, say, short term, and I could look at SEZL as the first stock that I find interesting or might find interesting. Let's take a look at it and do an autopsy. So this is so similar to what we saw in the market. I want to look at this on a monthly chart real quick. And my guess is that this is probably an IPO. And the reason why I say that is because I don't have a high jump that's forming, and it needs at least 200 trading days to get one. What we saw in this market, now look at the stock right here. This would have been a great time to find it. Why? A break above the 50 and the 17-day on massive volume. Well, let's look below, and what do we see? We're looking right here. In fact, let me see if I can get the magnifying tool without messing up this entire presentation. Okay. I want to highlight this area right here. And what you can see is this green dot is my EMS signal. And that is an independent buy-sell trading system. When it's green, you can be long. When it's red, you're out. It is a very fast moving. When I was in between careers, meaning I had a non-compete after selling one of my companies, I developed that tool and did very short-term trading. The next dot down, which we don't see, is what I call my CPR indicator, and it is another crossover system that gives really actionable buy and sell indicators. Note, it actually fired a few bars earlier. And then we have 4 dots. One is the gap, the second is the volume, third is the breakout, the fourth is the momentum. Notice this yellow line. We were in a squeeze. We came out of the squeeze. How do I know we came out? Because it turned to a green bar dot. You get 3 dots when you come out of the squeeze. And this is a PSAR. We had a PSAR reversal. This here represents a green candle low occurring days ago, which can be a single bar reversal. It's hard to act on these things, but that actually occurred right here. Now, when you look down here, notice the separation here on the OBV, and that you actually went green here. And if you look at relative strength, the top number is above the bottom number, which tells me that we've actually broke out on relative strength. This here was a optimal buy position. Sideways move, pull back, and a take out of moving averages with lots of impulses and great volume. Well, of course, you don't always get, now I figure out how to undo this, if I hit escape. I can never really figure out how to get rid of this thing when I go into it, which is why I probably shouldn't do it. And I got multiple monitors here. Let's see if I can figure out how to kill the magnifier. I know it's a simple thing. I just remember, I think somewhere we're going to see a plus and a minus up at the top. Oh, where is it? I'm going to, let's see. Oh, how about if I click that? This window. There we go. All right. So what do we have here? We had a breakaway gap, massive volume. This stock has run from this breakout in July, which showed up on scans. Why? Because I scanned for each of these dots. Has run from 100 to 431. Wow, I can't chase that. It's a little bit too far. Upstart. Upstart, I believe, applies to AI to either insurance or financial assessment. And this thing had great earnings. How do I know that? Because I could flip fundamentals. And you could see, well, not great earnings, I apologize. It responded well to earnings. And even though, I mean, I guess the key is here that must have been forward looking because that looks pretty ugly. Now, when I have a question there, I'm going to pull up my TradingView package. And right now, all we're really looking at is this thing in the middle, which I blew up, which is the fundamentals that we're going to be bringing this whole thing into the app. So let's bring that up and let's see. So yes, it was a horrible quarter, but look at the surprise. They beat by 57%. That's what matters, and beat on earnings. And this propelled this to a big, big move. Now, when I see something high jumps 100%, I can't buy this. It's too far extended. DXYZ, Destiny Tech 100. I have no idea what this is. I wonder if it's an ETF. 63% move. I'm going to skip it. Well, maybe I shouldn't skip it. Let's look at all the blue dots that have come in. The OBV relative strength look good. I just don't like this pattern. I'd have to know more about it. I know this initial is Goldman Sachs. Had a big move up here on earnings, flagging a little bit. Looks like it's getting ready to break out. I might put that into a watch list. MSCI, I know they have a bunch of ETFs. Now, this one I like a little bit more because it's actually sitting on the 50, crossing the 17. So a fresh breakout. We have a breakout momentum and a CPR, but I don't like the fact that both of those are red. MCO, Moody's Corporation. Uptrend pullback and a breakout here. This one is interesting to me because it's taken out the 50. So I'm going to, okay, I'll look at a couple more of these. EVR, Evercore, big gap up and now it's flagging. Hard for me to chase. I mean, that's a problem that I have. I don't like chasing. So let's add those to my watch list. What about, well, that's all the financial services. So let me click this and undo it. Now, what we can look here is at, let's look at just credit services. Should be 144 of them if it does it right. Actually, not 144 industry groups, 35 in credit. There's Sezzle and Upstart, Discovery Financial, DFS. Again, this is what you expect to see after a big gap, and I'll wait to see it break out of the flag. MasterCard. Nice move, breakout, and ready to go higher. So I might put MasterCard there. Bank One. Capital One rather pulling back. Visa. All right, these have all had big moves. How about the next one on the list is aerospace and defense. All right, so I've ranked these by short-term momentum. I've ranked them there on the stock list. So Axon, the old taser, this thing went nutso. Can't chase this one. Look at the high-low jumps at 100. LMT, Lockheed Martin. Setting up nicely here. I might want to put that on a watch list. The next one, CW, Curtiss-Wright. Big run, 100%. Can't chase it. NOC. Uptrend pullback sitting right on the 50. Actually moved up off the 50, but I like Northrop Grumman. Let's click it. AVAV, I think this is a drone manufacturer. Yeah, it probably goes higher. ERJ, I like this one. Move off, not yet too extended. Let's highlight that. Let's just look at LHX, which I like as well. Here was the flag after the gap, and now it's running. Add this to my watch list. And now look at one more as part of this top-down approach. Let's turn that one off. And now we're going to look at medical distribution. And this is one that I highlighted last week, which is McKesson, is one of my favorite stocks in the market, and it had a major gap. I highlighted it when it was down here. Bought some. Beautiful move. It's now getting extended. Cencora, the old AmerisourceBergen, pausing up here after a big move. These things have just had massive move. It's hard to chase. And then we have Cardinal Healthcare, also a big move. I'm going to put that on my watch list. So right now we've gone through from a top-down approach, and I showed you how I took a list of stocks and was able to break them out into what I think are the leading entities. Now I'm going to go back to my impulse view. Okay, now we're sitting in the impulse view, and let me just highlight what we have. I already reviewed the chart that I look at. Here I have, again, the list of the indices, or in my case, what I call the JAS group. I have last change percent, number of up dots, number of down dots, how long ago the daily bongo turned and what direction. So that says it's green for 6 bars. The weekly bongo, red for 4 bars. Then the short-term, intermediate, and longer-term momentum. Relative volume, what was the volume like in this session? So when I, just by seeing the relative volume of 402, I know when I click on AAOI and we let it filter through that massive volume session. And then we have OBV, and not what the value is, because I don't even know what the value means, but how is it compared to the 10-period EMA and how many bars since it's changed. And then both the daily relative strength of the instruments versus the spider and a moving average. How many weeks has it traded above the moving average, or in the case of red, below? So there are many things that I could do on the impulse side. One thing I can do is just look at who's got the most up dots. XPOF, Exponential Fitness. So I'm continuing to build my watch list. So Base, big breakout, massive volume coming in. EMS, CPR, 4 dots, relative strength LBB look good. So I might add that. AAOI, we've looked at before, and I think AOI is probably too extended at 100. AAON is in the insurance. I thought they were insurance, maybe not. Big, giant move on Friday, too extended. ADMA, I think we've already picked this one, but this is one pullback, breakout, pullback, breakout. It's got some great earnings growth coming, so we'll check that. Alarm, ALRM, big move off of the bottom, closed below the 200. I'm going to skip that. Could look at AMPX, too cheap, so I'm not going to really care too much about that. I can look at, as I said, different things, age of bongo, relative strength. Also, I could rank them by short-term or momentum. And what comes to the top, interestingly, is XPOF. Actually, that's not, hold on a second. I always got to remember to turn off that scan. Now we'll rank it here. I hate when that happens. That's why it's in beta and why we haven't released it yet. We're still doing some final fixes on that. We meaning Praveen. All right, so rank it by APP comes to the top. This is the stock of the season. It's run from 87 to 290 in as little as 2 months. Way too extended. Upstart, beautiful stock. Costco, I don't understand the fundamentals. Trades at a crazy multiple with not crazy growth rate. So I'm able to rank them multiple different ways. Let me show you what's really cool. I'm going to go into this thing that says filter. And first thing, I want to buy stocks that are above the 200-day SMA. So I click that, and let me just show you this. Actually, I went out of JAS. Let's go back into JAS and get the 3,367 stocks. Let's go into the filter, and let's filter above the 200 MA. Drops it to 2142. I want volume greater than 500,000. Drops it to 1382. And I want price greater than 5, 1261. So now I could do all my ranking and things off of stocks that meet the criteria that are necessary for me to be interested in them. Okay? Now, when we've done that and we look at the JAS, what comes to the top is Sezzle. And Sezzle is one that's just crazy. 90 in August to 431 financial services. No idea who it is. I wish I owned it. I don't own it. We talked about this one before. Had great buying opportunities. Still don't know what they do. Now I'm going to go back in my filters. And I've got a number of systems. 2 days up on the Kahuna. That's 2 days of momentum. It gives me a small list, and I could look through DOCS, Doximity, as I said, Meta for docs. Insulet, PODD, broke out. AAOI, we've seen VEEV, technology for healthcare, broke out. Fortinet, technology was a application software, safety type company, security company. ATO. Now you're noticing every one of these stocks has broken out, is probably beyond chasing. Not ATO, Atmos Energy, ELS, Equity Lifestyle, pullback. This one looks interesting. Now it's a REIT, so I might go back into my trading view, type in ELS. Now what do REITs do? REITs pay a dividend. So let's see, it pays 48-cent dividend. That's not very much. Great margins. Earnings of 48 cents. Next are due February. We can see their growth rates and surprise here. And they have had some revenue surprises, even though quarter over quarter there's not been a lot of great growth. But this one looks like it's turning around. I might be interested in that one. Go back into my filters. turn off that one, and let's look for all the stocks that have a multi-time frame CPR buy. This requires a weekly buy and a daily buy in the same instrument. And I think that this one is not working because it should make the number smaller. Let's turn off the buy. Whoops. And let's look, turn off the buy. And let's look at the sell, see if that one's working. All right, so we're going to have to work on that one. Weekly bullish reversal looks for a specific weekly signal. And you could see it drove us down to 122. And a lot of the stocks we've been looking at, here's Duolingo, another stock, major run, broken out to new highs and probably extended when it shows its face. There you go. So just wanted to show you how we built in a number of things from both a tops up and a top down and a bottoms up approach to find leading stocks. Hope you like this demo. We'll be working on why it shuts off, speeding it up, and hopefully we're coming to market very soon. I'd love to hear your comments, your thoughts, things we'd like to see that we didn't show you.